Hello everyone, my name is Hadija Lashasi, and I'll be doing my final final presentation on Dangote Cement. Alright, so as I said before, I'll be doing my project over Dangote Cement, and the CEO of this company is also the founder, and he is Aliko Dangote, and he's a Nigerian man. He's also known as the richest man in Nigeria, the richest man in Africa, and maybe the richest man in the world. Fun fact, this company was founded in 1981, and it started off as a trading business with a set focus on the importation of bagged cement and other things such as flour, rice, sugar, salt, and things like that. But now it's just a strictly cement-based distribution company. Dangote Cement is known as Sub-Saharan Africa's leading cement company. It has a production capacity of 52 million tons per year across 10 countries, and this is exactly what makes the company the largest cement producer of the Sub-Saharan Africa. Alright, so for the overview of the company, the values include customer service. They would like to They would like to satisfy their customers and serve them with full integrity. They also want to show their entrepreneurship by investing in new businesses and developing them within the market. They also do this with established businesses, help them become distributors within Dangote Cement, and this allows the companies to grow. And this allows Dangote Cement to grow as a whole company. They're also strong on leadership. They strive on being leaders within the business world, the markets, and all communities, local and national. While doing this with excellence, they demonstrate teamwork, respect, and so much more within the company. And at the bottom, as you can see, here are some of the recent milestones the company included on their website. The revenue went up 36.4%. Earnings before interest, taxes, depreciation, and amortization went up 25.1%. The total capacity across Africa, which I said before, is 52 million tons that this company produced, and within Nigeria is 32.25 million tons. All right, for their mission statement, this is a very detailed mission statement within the company. But to summarize it all, the mission statement just includes delivering a strong return to all their shareholders, and they just do this by selling high quality and affordable at affordable prices. And this also, they also strive to help Nigerian and other African companies work towards self-reliance and self-sufficiency. They just believe that providing economic benefits to local communities by establishing efficient production facilities in strategic locations is just a way to lead areas such as governance, sustainability, and environmental conservation. Now on this side, here I just provided some of their products, and some of their products just include the Dangote Blockmaster, the Dangote Falcon, and two versions of the Dangote 3X 42.5, and they're just all cement. Now, I have pulled some of their financial summaries annually for the past few years, and I started in 2021 and then in 2023. And some of the highlights for 2021 just include the revenue going up 33.8%. Their group earnings before interest, taxes, depreciation, and amortization went up 43.2% with a 49.5% margin. Their earnings per share went up 31.6%. Their proposed dividend of this year is 20 naira per share, and their net debt at the end of the year totaled to be 225.1 billion naira. And as you can see, I have provided a picture of the financial statements, a summary, and a financial review. For 2022, their financial summary had the highlights of their revenue going up 17%, and their earnings before interest, taxes, depreciation, and amortization went up 3.5% with a 43.8 margin, and their profit after tax went up 4.9%. And the proposed dividend stayed the same as the last year of 2021 at 20 naira per share. And their net debt of this year has increased to 422.9 billion naira. And lastly, for the financial statements of 2023, this financial summary highlights just include the revenue going up 36.4%. Their earnings before interest, taxes, depreciation, and amortization went up 25.1% with a 40.1% margin. Their profit after tax went up 19.2%. Their earnings per share went up 18.8%, and their net ended off at their net debt ended off at 521.3 billion naira. And this year is different because their proposed dividend went up 50%, and it is now at 30 naira per share, which is really great. Now, looking at all of the financial statements over the years, the trend analysis I did throughout the years, it all fluctuated. The revenue growth had a little bit ups and downs throughout the past few years, but it was all positive. Like in 2021, it increased by 33.8%, and in 2022 it went up 17%, and it's still going up but decreased from 2021 and went right back to 23. It went back up with an increase of 36.4%. This basically just shows the company can demonstrate revenue growth, and especially in the year of 2023. And as you can see with my graph, it started up, down, and continue to go up. And I believe that's how 2024 will go. Now, for the earnings before interest, taxes, appreciation, and amortization, it fluctuated. Like in 2021, it was 43.2%. with a 49.5 margin. The Pan-African increased 24.6% with a 24.4% margin. And as you can see, the change in 2023, it increased 25.1% margin with a 40.1% margin. And the Pan-African segment grew with a 28.5% margin at the end of the year. And now the graph I did below, it includes two graphs, a bar graph and a line graph, of the group margin, of the Pan-African margin, and the earnings before interest, taxes, depreciation, and amortization. Now, although the earnings before interest, taxes, depreciation, and amortization margin, it went down in 2023. It showed impressive growth, and especially in the Pan-African segment. Now for profitability. The company in 2021 earnings per share, it had increased 31.6%, and it stayed at the dividend share of 20 naira per share. And also in 2022, and it increased in 4.9%, with the dividend staying also at 20 naira per share. Now in 2023, it had also increased 19.2%, but the proposed dividend actually increased by 50% and is now at 30 naira per share for the following year. Now the debt levels, in 2021 it was 225.1 billion naira. In 2022 it was 422.9 billion naira, and in 2023 it also increased to 521.3 billion naira. Now the net debt each year increase, and it especially rose in 2023, but the net gain ratio declined in 2023 from 2022, and this just suggests that there's improvement in capital structure. Now for the competitors, because there's always going to be competition in industries such as this one, as large platform they have. I had identified two of its top companies' competitors within the cement industry or building industry. One of them is called, on this side, it's called Tanzania Tanzanian Portland Cement, and this is Tanzania's leading cement manufacturer. And in the last year of 2003, on their financial statement, they had a profitability of 2%, which increased, but there was a minor decrease in revenue for them last year. And then for the second company, Lafarge Tanzania, which is also based in Tanzania, their revenue of 2023 increased, and also did their gross profit increase during the same time. These two companies are very much established in the market and in the business world. However, their financial reports and their financial revenue growth does not match or exceed the growth that Dangote Cement has provided in the last 3 years. Now, if you are thinking to invest in our company, I would want you to think about some points. There is a strong financial performance over the past 3 years of this company with an increase of 36.4%. The earnings before interest, taxes, depreciation, and amortization was up with a significant increase of 25.1% in 2023. And this just indicates a strong operational efficiency. Another things like having a strong dividend policy with a 50% increase in the last year that is now at 30 naira per share. This company is just also consistent with a constant increase in profit taxes with a 19.2% raise in 2023. These are just some more points on here just to make you think over investing in our company. It's great. Now, also investing in a company with some goods, there are going to be some lows, and these are called risk factors. Risk factors that we have within every company. These are 3 main ones. I'm going to show you the risk factors, but also a solution that comes with it. There are going to be competition. That's one of our risk factors, and especially in this industry in Africa, cement is a basic commodity, and in the market share and possibility. However, Dangote Cement invests in innovation and operational efficiency, and this just ensures a competitive edge that puts them on top and keeps them on top for the past few years. Now, for the second one, operational side of things, there are disruptions in operation in almost every businesses, such as supply chain issues, things like that, and things like this can impact the productivity, financial performances, and now they invest in supply chain management and operational resilience. This combats it, and this just shows the earnings before interest, taxes, depreciation, and memorization levels and how they're managing, which combats, and it actually is declining. And lastly, for the debt, I know from every year since 2022 it has increased, and this could be a little iffy for investors, but however, this company maintains a net ratio of 30.2%, and it has a strong earnings before interest, taxes, depreciation, memorization. And this just signifies that there is a constant sufficient cash flow to service this debt. So it's always money coming in to combat this debt. It's just not the debt increasing. So it's a good ratio. Now, every company needs recommendations. Some recommendations I would give to this company is just to invest in growth prospects, monitor some of their developments, like staying informed on the microeconomics and all the regulatory changes that's going on within the market. They could also change with the market as the market is changing. The market is never steady and stable. How they sustain profitability and focusing on companies, the ones that they're pulling in for the distributors, there's going to be constant profit growth with that, and the long-term stability, that would take some time to look over companies to invest in. For some short-term investment strategies that I would give them is benefiting from the dividend policy that they are constantly increasing in the past 3 years. They're making profit from somewhere, so they should take advantage of this dividend increase that is reflecting the strong profits that they're getting. They capitalize on markets when they're dipping in markets. They should follow, sell, things like that, and this will have an increased financial opportunity for the company. Here are some financial statements over the past few years, from 2021 to 2023 of Dangote financial statements that you would like to look over. The two statements, 2023 statements from the two competing companies to compare and contrast and see the differences. And lastly, all three of their websites that I have got all the information from. Thank you once again for listening to my presentation. And if you have any questions, click on the email below and I would answer them. Thank you so much.